Welcome to TradeTheNBI.com. This is John. This report is for the 24th of January. Well, some might think, wow, we have a lot to talk about, but do we really? I mean, we've only been discussing this for quite some time, and even the lead up in through end of November and December, the systemic issues that really existed, there was little or no way out of the configurations that existed. So none of what we're seeing is out of line as traders realized, hey, maybe the Fed doesn't quite have our back at the same level we thought they did. And once that happened, pretty became clear every time there was an opportunity to get out, they were getting out. And you've seen that play out beautifully. Of course, now that brings us only to the lows of October. It's hardly catastrophic from that standpoint, though from the extraordinary buildup that led into what was the Santa rally, it's a significant percentage decline in there, and pretty clean from NBI white popping up here, and then once the magenta broke down, first line was to the 50%. We were looking at that right here. Looked like the bulls might be able to stave off trouble, but pivot below the 25, which took place right there, to the 50, and held up a little bit until the continued breakdown of magenta below, with white riding above red, and that was the death knell to the 0% that we could tell was happening immediately from that point. And sure enough, and you can see from DOC standpoint, a bit of softness throughout this, with fading long-term buyers in the red as well as green, and shakeout just melting down, and still below the red line, and that can stay that way for quite some time. So as the carnage over, again, you're going to see significant bump backs and really good rallies within these, and the only key is, are we going to be turning around making higher highs? And what I look for is what you would call like a delta V reversal, where we get the like over here, the sharp down day that spikes back up, and then you finish above and you form that V where you have this nice wick. Doesn't have to be that way. We may build a slow across, but at the end of the day, still have to flip to buy configuration. The fact that orange is dipping lower here, as long as it doesn't pivot up, there's a chance that bulls could, pull off a little bit of holding on kind of scenario. There's going to be that points where people think everything's oversold. They jump back in and repeat again, because things aren't oversold when you have a very different dynamic existing that didn't happen or just was not in existence a little while ago. And this is that systemic risk that I keep saying people underestimate, that once it starts, it's so much faster than they think, and what was safe is not even remotely safe. So from an NQ standpoint, of course, you get articles saying that if 14,000 falls, that it's over, the sky's falling, blah, 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 blah. It's like, well, yeah, I wouldn't go that far, but clearly easy enough to see what the NASDAQ has been doing since, the decay happened there, and it's been far weaker than the S&P throughout this whole setup. So none of this was even remotely surprised. And you had, we talked about it, more than half the companies had already been sold off 30+% and going into the holidays. So it was just those final 6 stocks that really were lifting up the indexes to these astronomical levels. And some of them still good companies. It's just a question of whether or not they're going to have the valuations that they had before, as investors do that rotation we talked about, which was towards value and towards the rising interest rate environment, which means that there are other investments that are a bit more attractive, that have less risk, and being in the market has more risk. So Euro certainly is not the place to be for that change in risk. Gold definitely is, and that's going to continue to accelerate. That'll be bumpy. Again, we talked about the transition of cryptocurrencies as the alternative hedge to gold, and it played out that way for a while, but then there was sort of a flip moment back in end of November, early December, where it stopped really being so quintessential, and cryptos really became less attractive as governments started applying more and more pressure to eliminate the cryptocurrencies. From a bond standpoint, well, That attractiveness into bonds has caused rates to fall simply because so much more demand into it, but I think you can look for that to retrace as soon as that stabilizes a bit and flows adjust accordingly. But still expect interest rates to continue to rise, and then the market forcing the Fed hand without really even the Fed wanting it to, but the inflation numbers are just out of control and no stopping when you see oil like this. And no policy changes to mitigate it. Bizarre, but that's the environment we're in. Speaking of environments that we're in, well, let me just go to the daily on it first because it tells the story. So from 64K on Bitcoin, a bit in a short, nothing's changed. We had 39,000 people said. I got a few angry responses when I was up here in the, upper 50s and that, calling for 34. And then even to the 28, which seemed absolutely ridiculous, except for now you're looking at, we're at 33.9, down another 4K, under 11% on a dip literally overnight. And it's that continuation that was clear from the charts. NBI white leading it. The little pop attempt that we had red leading that setup, and then once it dipped below, that was the setup for the next move lower. Pivot under 25, new lows with that setup. So, and then the shakeout minus 24. So, there's just really nothing shocking about any of that. So when we look at it from the intraday 60-minute chart, up there at that 42K was the peak and beautiful sell signal. And here it is, no change still, down at 33. Enough said with that. The same thing with ETH. I put up the daily here because intraday, while we get a lot of action, there's a lot of intraday. I really like the fact that it has such a robust intraday trade on its 5K, but you can see it's also been in that same sell from the same period of time as Bitcoin. So there's a consistency there, which I think is important to see when it comes to relevance, because when you look at this intraday chatter, it goes back and forth. The signals are still excellent as far as those readings, and then of course the morning gap down, and the continuation has been one-sided, so to speak. And this is where people who kept saying buy the dip, you can keep doing that until you run out of margin. And we're sort of at that point where we're starting to see even again a secondary level of liquidations and things like that, which only fuel the exacerbation of the moves. And frankly, when market makers see that situation is happening, even if they've taken losses, they continue to exacerbate it because they see it as an opportunity to grab some more free money, and it allows them also liquidation to get what they're looking for cheaper. And again, this has been a hedge in some cases for people to be covering long exposure in the markets. And so the necessity of trying to get out of very narrow windows is very difficult. This is the problem with some of these setups where you try to sell too many Bitcoins, you try to sell too many Ethers, you got a problem because there's only so much buying supply that can handle it. From our 50K standpoint, every time we had a little bounce, we get the continuation sell signals, and that just led to continued breakdown. Didn't like that setup of the return, and it was decent on the SP, except for the fact that you had red leading. So as soon as Magenta pivots on that breakdown, and that's exactly what we're seeing at this particular stage. And from an intraday, well, there's a lot of activity intraday. Too much of it to really go on about. A lot of it was still very decent signals to the upside, and that's something you're going to want to respect because some of these moves can be 20, 30 points. I mean, even just this move here from 44.60 to 44.8, it's 20 points, just a few bars. So the rips to the upside are just as crushing as the dips are to bulls as they start to fade and lose just as many points in short order. So again, I always encourage just stay with the signals, and that will keep you on the right side of most of the action. And you can see when the dots remain in those particular color ranges, It takes a while before it moves out of that zone, and as soon as the Magenta, though, has been taking the lead, it creates a little bit of a pop, but as soon as it gives it up, and clean drivers. And so this mentality of, even when we had clear signal for sell during the summer and early fall, you didn't get a whole lot of dip with the sell signals, whereas now you're starting to get what you would expect to see from a full-size return on the moves, which I think is a bit more normalized. I think that we're really seeing a lot less intervention when it gets to this kind of normalized flow. So that's, I think, a positive for the market, because that at least adds to confidence that we're getting true price discovery. So every time we're getting those sells coming back, following through, the white NBI leads, we're looking for those 0%. Turnaround, this one started with red leading it, with the NBI coming in for the buy, but Magenta took over. That was enough to get it up there, but again, as soon as it faded, and it was a double dip, because you had the dip below 25, came back, but never could take over Magenta. So any of those were reasonable, but once the dot popped in, that one became pretty clear, because we were coming off the push towards the 10. And even if you waited another one to the white NBI getting over red, still plausible, given the fact that we were watching rising gold and Azure at this particular stage. And that's why you saw that pop back up towards the highs, which would have been frightening, except for the fact that it was all white right there. And that's happening here in the pre-market, led to the full fill back all the way to the zero, and then some. So 43.77, another one down at 43.43. So it's going to be a lot of activity for a Monday, and I would expect it to be bi-directional. I'm not looking for just a continuation slam sell, though there is a lot of panic, and we may see some margin call activity. So we'll know more by about 11 a.m. or so market time how some of that's going to play out. So looking for the excitement of it. As always, though, trade well. We'll talk again later.